Welcome to our weekly Forex and Futures forecast. My name is Jay Norris. I teach the art of market analysis and trading at Trading University. First market we'll cover will be the Australian US dollar. There's the Aussie US dollar. Really nothing's changed from the way the patterns were unfolding coming into last week, into this week. We said last week that as a short-term trader, as a swing trader, you'd be working the long side, and that worked out. Here, let me go to an intraday chart and show you exactly what I mean when I say, hey, we're going to be trading the shorter term patterns. There you can see a beautiful support level. That's a 50% level there. You had a nice double bottom on a 50%. Textbook, exactly how we teach it. Similar, you have a beautiful V bottom there right on a 2/3 level. So boom, boom, a couple really nice trades, really nice swing trades here, both early in the week and then towards the end of the week. So Aussie dollar, pretty good to us last week. Next market, the dollar Swiss. Dollar Swiss backing down. You see that same primary pattern in the green box that we had on there last week, and then we shaded in your shorter term secondary pattern. You can see that's what's given the markets resistance here. You can see you got into the zone here. You had a 60-day zone, then that short-term secondary zone. So you had a couple zones on top of each other. Market just wasn't strong enough to clear those. Hit resistance essentially backing down. Now it's sitting right on a shorter term, maybe a 30-day support level right there. But then you can see, the support stacking up below, kind of the anatomy of a sideways market, the anatomy of a pennant there. We still think in the long run, the way to go is continue to maintain long-term positions and look to add to those on-market dips. Likewise, you're getting a market dip right here. Pan out to the monthly chart. I think that's the really big picture here, and you can see how much room is on the upside in that market. And again, that's why we call this the trade of the decade, long dollar Swiss. Investment of the decade, really. Next market, dollar index. Here's your dollar index, similar to the Swiss. You can see it there. You've got your long-term secondary pattern up, your primary pattern up. However, intermediate term here, you got looks like a short-term secondary down, and you got a lot of these short-term. Your intraday patterns are all down also. So same story. Long-term, you got to focus on the big picture. You got to maintain those long-term dollar longs. Likewise, you want to add on dips. And again, here's the dip. So same story here. Just keep your eye on the big picture. Keep your eye on the long ball, and you'll be able to see this in the next chart, the euro. There it is. You can see the euro hit resistance right there. From our perspective, that's a nice setup there, relatively low risk, well-defined setup for us right there in the euro. Take a look at that shorter term there. You can see you had a turnaround here on the 4-hour chart. So we like that sell setup right there in the euro. Again, very well-defined risk-reward for us on that. Overall, in the euro, I think you got to focus on the big picture. Again, I'll pop out to a monthly chart, and you'll really see where this guy's been and where it's going to. Overall, you've been sideways now for a little over a year. Probably get a better perspective on a weekly chart. There it is. You're in a bear market. You've had a relatively shallow retracement of that market last year. The bottom line is, from a trader's perspective, there's a lot of room either side, right? There's a lot of room on the upside. I mean, you could rally quite a bit in the euro, but it would still be in a bear when you see the size of that, the beginning of the bear in 2014, really. So a lot of room either side. And, here's what's really nice about Forex. I tend to be more of a futures guy, but you got to focus on Forex, too, because they have those smaller contracts. To me, anytime you get a big rally in this guy, just go sell a couple of micro minis, or minis, really. But the micro minis are good, too, because you're not going to get in a whole lot of trouble with those as long as you don't get greedy. So I'm a big believer in selling rallies in this guy, but you do it with a small enough position where you're not in any threat of them running you out, because that really is the threat, getting knocked out on one of these rallies. You got to keep your eye on the big picture, and the big picture is you're currently in a sideways consolidation period of a bear market, and you're probably very likely going to have another leg down. The thing is, you want to maintain that overall short position. You don't want that position to get too big where you get run out on a rally, and then when it does turn around and proceed lower down to par, probably 95 down in here, that you're still short and you're reaping the benefit of that. So very, very important that you keep your eye on the big picture here. U.S. stock market next. Real good turnaround for the stocks. You could see last week that 60-day pattern was down. They shifted it up a couple of closes above a level in here. Now you jumped above that 120-day level too. You got a weekly close above that, so all we'll need is I think another daily close above there, and we'll be able to shift this pattern too. The pink box you're looking at, that's going to shift higher too, likely next week. So looks like the U.S. stock market, you're out of the woods. You can see that 2/3 level that right here that the market stopped at. You go all the way back to the all-time high in that market to this most recent low, and that's your 2/3 level. So you're already all the way up there. So you're really in a position to shift that primary pattern back higher in the U.S. stock market, and that's really the stock market's MO. Overreact on the downside and then recover very quickly. So what this means to us as traders, if we get another leg down here and the market puts in a higher low here, that potentially is going to be a heck of a buy signal for us too. So that's what we watch for now. Now that the market's recovered, now we look for it to put in a higher low, and we would see that as potentially a very low risk, high reward buy signal in the U.S. stock market. We're still big believers that the U.S. economy is in a position to really accelerate into the spring. Likewise, the European economy too. So we think the global economy is definitely going to have a big uptick just around the corner as the weather warms up here in the U.S. Midwest, the U.S. East Coast. We'll cover the gold market. Gold finally starting to spin its wheels here a little bit. You could see those same two levels we had on there last week couldn't close above them, and it looks like the market, you're starting to see some distribution at the top there. You're seeing those wide price swings, yet price really not going anywhere. So we think gold's setting up a rather nice sell signal. When I say a rather nice sell signal, relatively low risk yet high reward sell signal. Here, let's pan out to a weekly chart, and you can see gold's really in that same bear channel that it's been in all along. And just to put this bounce here, this short covering rally here in context, look at the size of this dead cat bounce here. Gold collapsed at the end of 2012 into 2013, and essentially had that dead cat bounce there, that short covering rally there. You see I put a trend line there to mark the height of that. If I slide that trend line down and mark in the height of the current bounce here, the current short covering rally, you can see it's about that same height, about that same size. So really, you've seen it before in gold. That's my point. You're still within that bear channel. Back down to a daily chart. Really excellent sell setup here. You gotta watch this guy. I was hoping it was going to hiccup up there and just kiss that 113 level. Give us a shot at selling. Generally, I like to wait for the momentum in the market to turn, such as you can see that moving average, that red line and that green line. I like to see that turn before you go in there. But this may be a market where I'm thinking about just putting some sell orders just below 113. So if I happen to be sleeping or I'm not looking and it pops up there, I can get short. And yet I don't have to worry. It's a small enough position where I don't have to worry about putting a stop right behind it, because I hate to go up there, get me in, then hit my stop, and then turn around. So again, it's always trying to size that position. So I think with the risk reward on that, you're looking at a whole lot of downside if you can get short at these levels above 1275 up towards 1300, where I don't think you'd need a whole lot of a stop on that. So that's what I'm looking at. Again, when I say it's a nice sell setup from our perspective, very low risk, potentially a very high reward. Last market we'll take a look at will be U.S. interest rates. 10-year note market. You can see on the daily chart, the notes have come off steadily now the last couple of weeks. Essentially, you're seeing a normalization of U.S. interest rates. Here's the weekly chart. Put it all in perspective. Here's the major top. What we see will be a historic top in the 10-year note market. This is a weekly chart, by the way. Here's your first, essentially, lower high in that market. Here, I'll scrunch it up and you can see it. So, huge bull market in treasuries as interest rates went lower and lower and lower, as the U.S. economy and the global economy had to downshift and essentially resize. But now we're seeing a normalization of that, and that's going to manifest itself in higher interest rates And in other words, the 10-year note will top out as the prices in the note go higher, interest rates go lower. Likewise, as prices go lower for U.S. Treasuries, then interest rates go higher. So we think you're seeing higher rates on the horizon. You're already seeing it right here in this chart. And we think, again, that's a normalization of not just U.S. interest rates, but global interest rates, and likewise the economy, the underlying economy overall. My name is Jay Norris. I teach market analysis and trading at Trading University. Thank you so much.